Analyzing an income statement for the very first time can be quite challenging. In fact, if you grab the same income statement from different sources online, you'll often see that sections are titled differently. Some numbers are in one income statement while they're missing from the other. And in today's video, I'm going to hopefully clear up that confusion for you. We're going to take a look at Apple's income statement from two different sources. We're going to compare them and talk about the differences. And then also along the way, we're going to go over some of the different formulas associated with it. At the very end of the video, also, we're going to plot a few different data points in both Excel as well as Python. And yeah, hopefully you should be learning a lot in this video. So with this quick intro out of the way, let's learn even more about an income statement. All right, let's take a look into our income statement. So income statement is also known as the profit and loss. You'll also see this abbreviated as P&L, and it's one of the three key financial statements for a company that showcases both the revenue and expenses over a period of time. A profit and loss is determined by subtracting expenses from revenue, including both the operating and non-operating activities, and it showcases the company's revenue, expenses, and overall financial performance, highlighting how efficiently the company generates profit relative to its sales and costs. So where you can find an income statement, there's quite a few different resources. You can go to a company website, a press release, investor relations. Those are pretty common areas. You can also go to a website like Yahoo Finance or Morningstar. And you can also grab this information from the SEC's EDGAR system, which is electronic data gathering, analysis, and retrieval. All you have to do is put in the Apple name when you say search by or a ticker symbol for another company, and you'll get the information that you want specifically down there. Also, I should mention, you'll find this on the 10K versus 10Q. That'll include the income statement. 10K is going to be an annual report, where 10Q is quarterly, 10Q is unaudited, where 10K is audited. So if you ever seen statements where it says unaudited versus audited, that is. All right, so a few ways you can grab Apple's financials. So I have a few links over here. The first one is going to be from Apple's newsroom. Then you have Finance Yahoo, then you have Morningstar, and then you have investor.apple.com SEC filings. So each of those specifically work. We'll click on them just to show you what they look like. All right, so here is the first link over here, right? You see net sales, cost of sales. We'll explain each of these different sections, but we'll be using this for the video, as well as Yahoo Finance too. So you can see how this is broken out. We'll talk about design differences and things like that as well. Here is Morningstar. So just go down below here and you can see it says income statement. And lastly, you can go to investor relations on Apple, right? Investor.apple.com, and just look for the 10K or 10Q, and we have a 10K right over here for the annual report. You can download this however you specifically want. All right, let's talk also about design differences. So where you grab your income statement, they're going to have different designs. So you can see over here, right, we have 3 months ended on here, but on Yahoo Finance, we don't. Also on the side of things, right, we have total revenue, the very first line. Over here, we don't, right? It's down over here, total net sales, and also the verbiage difference, right, between total revenue as well as total net sales. So depending where you're going to be grabbing your income statement, there is going to be some slight differences. What I recommend is you kind of have a basic understanding where things are on an income statement, understand that side of things, and then you'll slowly pick it up over time. Another thing to be on the lookout for is the number format. So on Apple's website, you say it says in millions, right? So essentially what that means is you add 6 zeros to a number. So you have the number over here of 1 million, right? There's 6 zeros associated with it. It's equal to 1. Then you can grab a number over here, like I grab the total operating expenses, right? 57,467. And we add 6 zeros to that, right? 57.4 billion. But it's easier to represent 57,467 here on statement. And you can see over here in Yahoo Finance, it says all numbers in thousands. So what that means is all you have to do is add 3 extra zeros. So 1,000 equals 1 in this case, right? And again, same exact number, it just a different representation of it. Okay, another thing to notice. So on Apple's website, right, you have 3 months ended versus 12 months ended. So 3 months ended is a quarter, which is going to be 3 months. And this ends on 9/28/2024, right? So you can see September 28th, 2024. 12 months ended is a year, which is 12 months. The date ending on 9/28. We'll be using this over here, right? Taking a look at 12 months worth of data. And then TTM is trailing 12 months. right? So TTM financial performance over the most recent 12 months, and it's not necessarily aligned with the fiscal or calendar year. The rolling measure that updates as new financial data is reported, typically with each quarterly earnings report. And before we start analyzing the income statement, one thing to know: revenues minus expenses, it's going to tell you your profit or loss. All right, let's start taking a look at it. So part one is going to be sales. I'm going to try to break this up into different parts. I think we have 6 in this video. So that way, if you want to watch a specific part and come back a little bit later, perfectly acceptable. Because it is a lot of information at once. Okay, so we're going to start off with total revenue. And total revenue is revenue before taking out any expenses. This is often called the top line number. And you can see over here, it says total net sales. And that is this over here, right? 391,035. And what's interesting is on Apple's statement, right? We can determine how much of this total revenue came from products and how much of it came from services. And let's do some quick math on that side of things, right? We can take 294,866, we divide it by 391,035, and we find 75.4% of the revenue is going to be from products. So you could technically take 100% minus that, or you could just do 96,169 divided by 391,035, and you find about 25% of the revenue is from services, 24.6% to be exact. Now on Yahoo, we can't get that information. So if you go to Yahoo Finance, you go to total revenue, right? It says 391,035 and it has the operating revenue down below, but it doesn't break it out, right, between products and services like Apple does. Now, Yahoo's pretty clean and easy. It's great to use, but you can't see where that revenue is coming from. Now let's take a look at cost of revenue. And this is the cost of manufacturing and delivering products to customers. What you need to know also is if we break up the sections from above, you need to have each section from above also in the cost of revenue. So you'll see we have net sales with products and services. Well, you have cost of sales with products and services as well. So you can specifically see, right, how much of the total cost of sales is from services or how much is from products. And you can see 93.6% of the cost of revenue is from products, whereas 6.4% of the cost of revenue is from services, which is really interesting, right? Most of your costs being product versus services only being 6%. Also, which kind of sucks, is on Yahoo, you don't find that information. You just see cost of revenue over here. It's all rolled up already into one number. Okay, now we need to take a look at is gross profit, which is going to be your total revenue minus your cost of revenue. And the total revenue over here is 391,035, right? The cost of revenue is 210,352. And you can see it's already mentioned down below gross margin, which is our gross profit, and that is going to be 180,683, which is nice. We don't have to do the math. And then what I also find interesting is we can find this for both products and services. So products, right? We brought in 294,866. You can subtract 185,233, and you can see it's 109,633. Services, right? 96,169 minus 25,119, 71,050. So although services brought in a lot less revenue initially, right? These numbers are, I wouldn't say pretty close because it's still a huge difference between them. But in comparison to what our net sales were above, I mean, these are a lot closer at the very end. And again, what you can also notice is you could add up both of these, the products and services, and this should equal to the 180,683 number for our gross margin. And here you go on Apple or on Yahoo's website, right? 391 minus 210, you get this 180 under gross profit. Again, all rolled up into one number. All right, so gross margin is going to be your gross profit divided by the total revenue. So we can do this pretty easily. We take 180,683, we divide 391,035, and you get 46.2%. And once again, we can calculate this for both products and services. So products is 109,633 divided by 294,866, you get 37.1%. Whereas services, right, 71,050 divided by 96,169, you get 73.9%. And you can see on this side of things, right, services is looking pretty lucrative in comparison to the products, although 37% is still pretty high. And again, on Yahoo, right, 180 divided by 391, 46.2%. All right, part two. Now we're going to take a look at operating expenses. And operating expenses are costs a company incurs to run its day-to-day operations that are not directly tied to producing the goods or services. There's a few things that are going to be excluded from operating expenses. So the cost of goods sold, interest expenses, as well as income tax. All right, so the first one is going to be research and development, right? This is costs related to developing new products or improving existing ones. And obviously, Apple produces a bunch of new laptops as well as phones every single year. So their R&D department is going to be spending quite a bit of money. And you can see over here where both of these are located at. Apple's statement has R&D first, Yahoo has it second. And also you can find out what percent of operating expenses R&D. You can just take this 31,370 divided by 57,467, and you'll see it's 54.6%. Engineers are expensive to pay. Next, you have selling, general, and administration. You'll see this abbreviated as SG&A. So selling expenses, advertising, marketing, sales commissions, promotional events. General and administration, right? You'll see this as G&A. Salaries for management and non-production staff, office supplies, rent, utilities, and legal fees. This is sometimes separated out, sometimes it is combined together. And you can see also, they're both operating expenses, but in sort of different locations on these, right? A different order. And again, you can find the percentage, right? 26,097 divided by 57,467, you get 45.4%. All right, part three, which is going to be operating income or loss. So you take your gross profit, you minus your operating expenses. This is going to be your operating income or loss. This is also called earnings before interest and tax. And this is the profit a business earns from its core operations. So lower operating expenses leads to greater profit, right? If you go back over here, gross profit minus operating expenses. So pretty self-explanatory. On this side of things, right, we have 180,683. We subtract the cost for research and development as well as SG&A. And then you get the value of 123,216. All right, now we're going to take a look at operating margin, which is your operating income or loss divided by the total revenue, which was at the very top, right? Top line statement. And then you can see over here, we take 123,216 divided by 391,035. You get 31.5%. Next, we're going to take a look at other income expenses net. So this is non-operating revenues and expenses that do not arise from core business activities of the company. And you'll see over here, it's labeled as 269, which is a tiny number based off of everything else on this income statement. Although it is still quite a large number if you think about it again, 6 zeros to the very end of that. And if you want to find your pre-tax income, you'll take your operating income or loss and subtract your other income expenses net. And this value is going to be called EBT, the profit a company makes before accounting for income tax expenses, right? And you'll see over here, right, you have 123,216 underneath the 269, and then we have our income before provisions for income taxes. Also, what you'll see on Yahoo is interest income on this side of things. So if you do have interest, you'll be taking that out. In this case, Apple does not. So that's why it is not present on this specific sheet. And also why I didn't include that into the formula. Just so giving you a little bit of heads up on that side of things. Okay, now we need to talk about provisions for income taxes. And this is the amount a company sets aside as an expense to pay its income taxes for a given accounting period. It appears on the income statement just below pre-tax income, which is our EBT, and represents the estimated income tax liability incurred on the company's earnings. And you'll see over here, it's 29,749, right directly below. And we'll use this in a second to find our net income. And to find our net income, all we take is our pre-tax income. We subtract the provisions for income taxes. And this is also known as your bottom line number, or net earnings. And this is the total profit a company makes after accounting for all revenues, expenses, gains, and losses during a specific period. It represents the final profitability figure on the income statement and indicates how much money is left over for shareholders or reinvestment back into the business. And again, just take 123,485 minus 29,749. We get a value of 93,736. Okay, now that is going to be the core of our income statement. But we're going to also talk about shares as well as other data that Apple has provided us. So here's the shares section, right? And one thing to note is shares are in a different unit. If you take a look at apples, right? It says in millions, except number of shares, which are reflected in thousands and per share amounts, right? So if you take our value over here, right? 15,343,783, all you do is add 3 zeros. It will not be 6 zeros as we did with every other number on this sheet. So that's super important to know. Otherwise, you're going to have different calculations for your earnings per share. Now, what I wanted to talk about is the two different types of shares that are on here, right? You have basic versus diluted. Very close values, but you'll see that there's some slight variation between them. So basic shares is the total number of common shares that are currently outstanding, excluding any potential shares that could be created through stock options, convertible securities, or other financial instruments. Diluted shares, and this is the most common one to use. It takes into account not just the basic shares, but also any potential shares that could be issued due to convertible securities, stock options, or warrants. These are potential shares that could be converted or exercised into common stock, increasing the total number of shares outstanding. So shares used in computing earnings per share, right? This is the number of shares that are out there, whether it's basic or diluted. And earnings per share is you take your net income and you divide it by the shares, whether it's going to be your basic or diluted. All right. So first thing you need to do is convert into different units, right? So the way that you want to do this is just multiply your net income by 1,000. So you'll see 93,736. You times it by 1,000 over here. Then you want to have your differences, right? So basic is 93,736,000. You divide that by 15,343,783. You get $6.11. And then diluted, same thing, 93,736. You divide that by 15,408,095. You get the value of $6.08, which lines up with what we have over here. So remember, just multiply your net income by 1,000 because of the different units associated with them, at least on Apple's statement. All right, now we're going to take a look at different regions that are also mentioned. So you'll see the section over here, and it says Americas, Europe, Greater China, Japan, rest of Asia, Pacific, and then total net sales. And this total net sales is going to equal what we had at the very top, right? So our revenue should line up, and it does on this side of things. And then you can just find the net sales by each region if you're kind of curious, right? So all I did is the math on this. We just take this number over here, like 167,045. We divide that by our revenue, which is 391,035. You get 42.7% of sales Apple are in the Americas. And then you have Europe, which is 25.9%, Greater China 17%, Japan 6%, and the rest of Asia Pacific, you get 7.8%. Next, we're going to take a look at category. So on the category side of things, again, this lines up with our revenue from earlier, 391,035. And then what we can do is add up all of the different products, and it should line up to 294,866, and it does, right? You take 201 from the iPhone, Mac is 29, iPad's 29, wearables is 37. You sum all those up, you get 294,866. And then obviously services are going to match each time, right? 96,169 with 96,169. First, you can find the net sales percentage by each category, right? And you can go iPhone, right? 51.4% of the sales, Mac 7.7, iPad 6.8, wearables 9.5, and services 24.6, which if you remember 24.6%, we did mention that a little bit earlier, right? And next, you can find the net sales percentage by a product category. So out of all the products, right, 68.2% is going to be from iPhones. Mac is 10% of products. iPad's 9.1%. And then wearables, homes, and accessories is going to be 12.5%. All right. And lastly, let's take a look at a data dive. There's a lot of different data points we could grab from the income statement. I'm not going to go over every single one of them because I want to show you guys how to plot and actually calculate these. So, and also we did cover quite a bit already going through the different sections of this video, but regardless, right? You want to use either Excel or Python for this section. Personally, I use Python, but I'll also show you Excel as well because I think Excel is pretty beginner friendly. And if you do want to use the code for this video, I'm going to link down to my Google Colab notebook as well. I'm not going to explain all the code in this video, but at least that is here for reference material. But if you do want to learn how to code in Python, I have another YouTube channel right over here, so make sure to check that out. All right, so now we're going to take a look at your revenue growth rate. And all you have to do for your revenue growth rate is take your current period, subtract it by the previous, divide it by previous, and then multiply that value by 100. So this is your Python code side of things. All I did is essentially create a dictionary, turn that into a data frame, and then used percent change, which is in pandas. Man, I said I wasn't going to explain the code, but this is pretty easy. Regardless, right, we have the date, which probably should be labeled as year, but 24, 23, 22, 21, and 20. And then also the growth rate associated with it, right? 2%, negative 2.8%, 7.79%, and 33.26%. And then we jump into Excel, right? Just paste in your data over here, insert a new cell, use the formula, right? New minus old divided by old, multiply it by 100, and you'll get your values without any formatting. I personally formatted my example over here, right? I just bolded all the different headers at the very top, something that's pretty common to do. I also said revenue in millions, and then just put all the values over here, and then changed what I had into percentages. What I will say is Excel by default, if you change the format to percentages, it is going to multiply 100. So just remove the times 100 in the last example. Otherwise, your values are going to be ballooned. But either way, you could approach this, right? If you're presenting it or if you're just doing the calculations for yourself. So I wanted to show you that. All right, next we're going to plot revenue versus operating income in both Python and Excel. This time I used a library called Matplotlib, which is probably the most popular plotting library out there. And I just compared revenue versus operating income. There's a lot of different data points that you could compare within an income statement, but this is a common one to do. And you can see both of these are slowly growing. 2020 to 2021, so the biggest growth for both of these, and then it's kind of flatlined essentially, right? And you can do the same thing in Excel. So have your data in over here, select a line chart, which is the comparison, and then format this as you specifically want. All right, and just to recap this video, right? The income statement showcases the revenues and expenses over a period of time. The top line is going to be your total revenue, right? The bottom line is your net income, and you can find your revenue, which is your total earnings from sales, your gross margin. You subtract the cost of goods sold from the revenue, your operating income, profit after operating expenses, your pre-tax income, income before tax costs, and your net income, which is your final profit after taxes, which once again is your bottom line. Hope you guys found a ton of value in this video. And if you did, make sure to subscribe. I'm trying to upload a video every 1 to 2 weeks here on the channel. And part 3 in the series will be out soon.